Can't believe it's December already. Where did the year go? Today I'm going to talk about smart financial moves you can make before the end of the year to improve your financial situation as we head into 2023. Hi, I'm Mike from Next Mission Financial Planning. I know you can't read this checklist, but I have linked it in the notes, and I'm going to go over these topics today, things that you can do to improve your situation in 2023. The first item is assets and debts, and talking about unrealized investment losses in your taxable account. Let's face it, 2023 has been a brutal year for investors. Tax loss harvesting might be able to help improve that. This is when you sell investments that are below what you actually paid for them. This loss can be used to offset taxable investment gain. You can also write off up to $3,000 against your income if your losses are larger than your gains. This can be a great strategy in down markets like we've had this year. There are specific rules regarding wash sales and selling something and buying it back immediately, so make sure you understand what you're doing or talk to your tax professional before making these moves. Required minimum distributions. Ensure you're taking any required minimum distributions from your accounts each year. This is typically from an IRA or a 401k once you've hit 72 years or older. The IRS has also recently proposed a new rule for inherited IRA distributions based on a 10-year Secure Act. This has created some confusion, but they have extended the deadline for doing this, so you don't have to worry about it for 2022. Again, consult a financial professional if you're in this situation and trying to figure out what you need to do with RMDs. Let's talk about tax planning now. Are you likely to see an income change in the coming year? For military folks, are you approaching retirement and planning to work afterwards? If so, your income and tax bracket may increase significantly. If that happens, it may make sense this year to contribute more to a Roth IRA or Roth TSP while your income is lower. Will your income drop in the future? If so, it can be a great time to defer taxes using a traditional IRA or traditional retirement account. This can be especially powerful if you have lower income years where you can convert them from the traditional into a Roth. Are you charitably inclined? The standard deduction has increased significantly, and this has limited most people's ability to itemize taxes. You could consider charitable contribution bunching and using a donor advised fund. If you check out the link, you'll see some examples of how you might go about doing that. Let's talk about cash flow. Do you want to increase your savings? In 2022, the maximum salary deferral to an employer plan is $20,500. If you're over 50, you can also take advantage of the catch-up, which is another $6,500. You've got limited time to make changes for this year, but next year, the overall limits will increase to $22,500 for everyone, and the catch-up for over 50 goes to $7,500. So if you plan to max out your plans, you need to make sure you're making those updates to your withholdings. In 529 accounts, you can use the annual gift tax exclusion to contribute up to $16,000 per beneficiary tax-free. This can be a great option for grandparents who want to help out their grandkids. As far as insurance planning, if you've got an FSA, make sure you're spending any contributions that you have or understand your employer's limits on how much can be rolled over to the next year. And if you've hit your health insurance deductible, are the things you can do before the end of the year to take advantage of that so you might be able to stay under it next year. As far as college planning, taxes directly affect financial aid. If you've got a high school that's in their junior year, this 2022 tax year is what's going to be first evaluated for that freshman year financial aid. The end of year financial planning checklist has a bunch of other things on it: tax considerations, bracket thresholds, what you do with a significant windfall, or stock-based compensation. So if any of those situations apply, please check out the link that allows you to download the full checklist. If you like this video, please like or subscribe, and you'll get updated when I post new content. I really appreciate you watching. Thank you so much.